there. And this was what I didn't know how to read, believe it or not. Just because my mindset was so off. It was just strategy, make money. I didn't associate reading a price chart with making money. I was like, well, this doesn't directly make me money. Just get me to the strategy. Did you go leave? I hope so. Is he gone? I love when we get people like that speak in, because it shows the difference between the successful traders and the non-successful traders, the mindset. So I like to think of price I like to teach it in really three ways, right? There is what we believe price looks like. There is the reality of what price looks like, price and reading a trend looks like. And then there is a harsh reality. Okay? So, just like the journey to success, right? Reading a trend is easy. At least when we first see it, right? If I drew a line like this, right? Would you guys say uptrend or downtrend? Right? Path to success, nice and easy. You start, you become successful, right? Get rich quick. Drop the link, buy our stuff, right? All right, pretty easy, okay? What about this? Gonna make it a little harder for you guys. What about this? Ooh, look at that. Bullish trend or bearish trend? Ooh, you guys are good. You guys are good. Now, at the very forefront, the very basic level of reading price, this is a very basic way of telling what trend we are in. If price is moving from the upper left to the bottom right, we are bearish. If we're moving from the bottom left to the upper right, we are bullish. However, when we actually, what time frame? It doesn't matter what time frame. It doesn't matter. However, in real life, is this what a trend looks like in real life? Have you guys ever looked at a chart? Does it actually look like this? No, right? The reality is that an uptrend looks more like this, right? Just like the kind of the mountain I showed you, it ebbs and flows. It goes up and goes down. It goes up and goes down, right? And I kind of spoiled the answer, but I'm going to ask you guys anyway. What type of trend are we in now? Bullish trend, are you sure? We got some little downward moves in here. No? No? Still bullish? You sure? All right, what about this? Once again, I'll be a little tricky. Ba 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 ba. What trend are we in now? Bearish. Okay. All right, you guys are sharp. So we went from kind of what the very basics of a trend looks like to the reality. Now, let me ask you this. In real life on a chart, how often does it look like what I just drew for you guys? Never. In real life, it looks kind of more like this, right? Give me a yes if this is more realistic. All right. Yeah. Much more realistic, and this is this where things get confusing for you guys? Yep. Now, what if I told you I had a way to eliminate the confusion? Would you guys believe me? Do you trust me? I'm listening. I hope so. Before I tell you, let me ask you guys this. What do you think could be done? If you're a tier 1 member, don't answer this, right? You keep your mouth shut. You guys already know. I don't want you spoiling it. What do you think we can do? Yeah, I know you want to show off. We want to show how great you are. We know you're great. All right, everyone, yeah, tier 1 members are great. Okay. What do you think we can do to help with the confusion, to help eliminate most of the confusion. Because we can never eliminate all of it. And my belief is that in nature, what we're doing is we're trying to, well, I'll let you guys answer first. 'Cause I'm going to ruin it for you. What do you think we can do? How can we make this less confusing? Look for patterns, set rules, testing, break it up into sections, time frame. That's a very common one, time frame. System, trend lines, insert a moving average. Oh, how dare you? You guys move, did you know moving averages they move based off of price? So moving averages react to price. ATR, structure, no idea. Reduce the noise. Okay. Now, tier 1 members, now you can involve yourself in the conversation. What do you think we can do to add clarity to this confusion, cloudy situation? Shake the magic 8 ball. Dead on. Yep. There we go. I like it, Chris, future T1 team member. We can add rules. We can add rules. Rules-based trading, right? I had a conversation the other day on the Facebook with a trader who was saying, he was talking about systems trading and discretionary trading. And I was trying to explain to an unopen-minded trader that discretionary trading doesn't mean you don't have rules. And systems trading is like, like something that's automated or like a moving average cross, right? Something that is black or white. Does that make sense, guys? A systems trading is something that's black or white, right? If the if the 50 period moving average crosses below the 100, then this, right? And a lot of people think of discretionary trading as being like the wild, wild west, where we're these crazy art people and this, just looking at it and going, ooh, I feel like this is bullish today, like some voodoo magic, right? That's not the case. Discretionary trading is rules-based as well. But it's a combination of having rules, but also interpretation. And that's very important in the market. So I say that because the market doesn't want to follow rules, right? The market is this wild bull out there. It doesn't have to follow the rules we set forth for it. However, rules-based trading is the only way that we are going to stay consistent. It's the only way that Damien is going to stay consistent, that Roscoe is going to stay consistent, that Greg is going to stay consistent. I have a very simple formula to success, guys. Consistent analysis plus consistent execution equals, say it, consistent results. Consistent analysis plus consistent execution equals consistent results. If you consistently look at the price chart the same way, analyze it the same way, look for the same type of opportunities, and you consistently execute those opportunities, that's the trading psychology side, right? You don't shoot yourself in the foot. You take the trades you're supposed to take. You avoid the trades that you're not supposed to take. You don't move stops. You don't take targets early. You don't do any of those mistakes. You should have consistent results. But it all starts with consistent rules. Now, before we get into some of the rules, based off the first lesson I taught you guys about with the straight line, does that make it a little easier to determine what type of trend this is? Remember what I told you? Bottom left to top right means bullish, right? Top left to bottom right. So always keep that. I know that's very remedial. It's basic, but it holds true, guys. I mean, if the first thing you see on a screen is this to this, there's a good chance we're in a bullish trend. That's the first level, that basic understanding. The second level is adding some rules. So let's go back to the second example that I gave you guys. Let's delete our charts here. I'm going to scrunch this up because we got Euro moving today. Let's go back to that second example where we had something like this. And this was pretty simple for everyone to understand. correct? Bullish trend ebbs and flows. Now, how do I know this is a bullish trend? Aside from the fact that we're going from the bottom left to the top right. What are some common things that we're seeing here? We're seeing higher highs and higher lows, right? The market is consistently putting in higher highs and higher lows. What that means is each one of these highs is higher than the previous one. Each one of these lows is higher than the previous one, right? Again, we're building up with simple concepts on how to do this. Same thing, I see new structure highs, longer up moves, shorter down moves, right? If I were to just to recolor this real quick, we can see that our move up in length, this blue move, is longer than our move down. Would you guys agree? Right? So those are a few things that we can look for. We could look for the market putting in a consistent pattern of higher highs. This is for an uptrend, a bullish trend. We can look at the market putting in a consistent pattern of making higher highs and making higher lows. We can look for the market putting in a consistent pattern of our extensions higher are longer than our retracements lower. Now, the last piece of the puzzle is to give us something that can be clearly defined. So here's how we teach defining a trend. And it's a conservative approach. I don't want you to think about actually trading anything right now. It's very important. Don't think about trading, right? Remember, we're not learning what to trade. We're learning how to trade. So I don't want to see any questions or comments about when do I buy? Do I buy here? Do I buy there? Because the truth is you can buy or sell at any given moment in the market. The question is, how are you going to go about doing it? And someone mentioned earlier about flexibility in trading. If you learn how to read a price chart and you can determine a trend, you honestly can buy or sell at any given moment in the market. We'll get into that a little bit with fractals and whatnot, but anything is possible. Right? So the first thing I'm looking for in identifying a trend is a 3-point move. Now, the question is, where does a starting point happen? Let's just assume that we violated a previous trend. And a violation of a previous trend will make sense later. Right? Here's a level of consolidation. Does anyone not know what consolidation is? I'm going to teach you what a 3-point move is. Don't you worry. Just make sure you write it down. Consolidation is when the market is moving sideways, so like a sideways channel, for example. And let's say we have a move like this that breaks out of that consolidation. This is going to be our first leg. So we're going to ID this level down here as being our starting point. We're going to ID this initial break right here. Yep, accumulation distribution. Yep, same thing. Yep, we're trying to simplify it today and not go too deep into that. But for you guys that are more experienced, the Wyckoff cycles, accumulation, markup, distribution, markdown. But we're trying to keep it simple today, just kind of knowing the audience. This first point right here is going to be our initial structure high, right? We talked about the market putting in a pattern of higher highs and higher lows. This is our first high, correct? Our first new high since breaking out of consolidation. Would you guys agree? So this is going to be our initial structure high. Now the question is right now, are we in a trend? Bum, bum, bum. No. Right? Because you guys said earlier, I asked you guys told me, you said, Akil, we need a series of higher highs and higher lows. We don't have that series. We have one higher high, right? So after our initial structure high, right, we all know that the market just doesn't go up forever, right? We usually see some type of relief, correct? We usually see some type of move in the opposite direction. Would you guys agree? This has many names, but this is called a retracement, right? Retracement, a pullback, an outside return. I was taught by different people, so I have all three terms in my head. It doesn't matter what you want to call it. So don't get caught up over the name. You can, whatever you feel happy calling it. You can call it an Oompa Loompa for all I care, yeah. But it's a move going in the opposite direction. Now we know that if we are going to be in a trend, this leg needs to be longer or shorter than the extension higher. Yeah, in a bearish trend, it would be a loompa, oompa. Bullish trend, oompa loompa. Bearish trend, looper boopa. Can't even say it with a straight face. This needs to be shorter, right? So let's say this thing moves down right here and we start doing here. We stop right there. And then the market starts doing this. All right. Are we in a trend yet? Why not? Tell me why. You guys are good. Jason, Darren, and myself and Charles, we had a meeting before the event. And we're just talking about how educated our group is. It makes our life so much easier. Remember when we first started teaching things a long time ago, we would get people that are just, they weren't as educated as you guys are. So you guys make life easier. So thank you for that. Trust me. Yeah. It makes it a lot easier. So yeah. So this is still nothing. Now, what if, oh, stop it. It's true, man. You guys don't understand how, I mean, it's, we won't get too much into it, but yeah, it makes our life easier when people can grasp and understand the concepts and when they have the right idea. When we can spend less time telling people why it's not a get rich. I mean, look, I asked you guys, no one has asked, when do I buy? That is new. Usually at this point, it's like, so do I buy it here? Do I sell it? Right? You guys have been with us during workshops for the last 8 years. Don't we usually get that? So do I. Is this where I sell? Right? We usually have one trader taking a live trade right now. So yeah, I just bought the Euro Aussie Akil because of your demonstration. I say I'm just drawing out lines here. Oh yeah, okay. But should I hold on to it? Oh. So yes, that's good. That's good. So what if price does this? Now we have a confirmed trend. So this little retracement outside return, I'm going to name it OR for outside return. This is going to be our outside return. And this is going to be our new structure high. This is the 3-point move that we require to define a trend. Make sense? We want to see a full cycle of not only an extension, but an extension, a retracement, and a second extension to confirm a trend. Now, when we end up talking about trading, can you buy this first leg? Of course. You could be a breakout trader and buy right here. Can you sell here? Yes. Can you buy here? Yes. But as far as just confirming a trend goes, and that's going to be very important, especially when we get to the IPDE process, we require this move. Now, what you guys just did was you developed a rules-based system, right? There's no ifs, ands, or buts now if you look on a chart. If someone asks you, hey, Dominic, are we in a bullish trend? Now it's just not guesswork. You can actually look on a chart and say yes or no. Correct? Yeah, I got lazy with that. This should be outside return. I'll fix it. I'm not really good at spelling, so I'm always afraid I'm gonna make a typo and you guys are gonna judge me. So I try to abbreviate as much as I can. I'm not good at English or writing or anything else more than trading. But yeah, outside return. And now we got our question. Yes, it does make sense, but what happens after the extension? Should you buy it or sell it when it reaches the peak? Either or. You can buy it or sell it if it meets your rules for engagement. And that's something we're going to get into later in the week, is building a rules-based strategy. But here's the cool thing, right? So this was simple enough, right? Developing rules to identify a trend, was it not? Everyone should have a grasp on, hey, I now have rules. I have whether you want to use them or not, I don't care. But it's an example of this is how you have rules to identify what the market is trending. You can now go to any price chart. Obviously, it takes practice to read it, because we're gonna look at an example of kind of the harsh reality of trading. This is the reality. It takes practice to read it, but you have rules. The cool part is this, right? For any of you guys asking, so do I buy it here? Do I sell it here? Right? What we teach here at Tier 1 Trading, we teach the same concept, right? It's rules-based trading. That's the philosophy. The same concept of creating rules to identifying a trend to creating rules to when you should trade. How many Tier 1 members right here have completed their trading plan or are going through the backtesting process? Give me a yes. Everyone that just typed in yes, they have a rules-based trading plan, right? So there are no ifs, ands, or buts about when, what, and how they should trade. It's either yes or no. There's no confusion. How cool is that? Now, that process takes time. Don't get me wrong. I don't want to make it seem like it's easy. You don't just you don't just spend 20 minutes with me at a webinar and then you go ahead and start trading. But it takes time. But I'll tell you what. Later in the week, Jason Grayson is going to come in and he's going to walk you through how to create a rules-based strategy. So you're going to know exactly how to do so. But do we start with that? No, we start with the spine. We start with the foundation. We start with the basics. Because when Jason comes in and teaches you this trend continuation strategy, when he teaches you this rules-based trend continuation strategy, you better be damn sure you know how to identify what? A trend. Because if you don't, you're going to be like me. You're going to be a trend trader that has no idea which direction the market is trending. And you would think a trend trader would need to have that information. But be patient. Be patient. Be patient. But yeah, you'll know exactly what you need to do. And this will all make sense. So we have this. What typically happens after this new structure high? We get another outside return, right? And the process continues. Now let me ask you guys this, 'cause I'm already going a little bit long. Do you guys want to see a bearish example, or are you fine with this concept right here? Again, this is the reality of trading. Let me know if either way, it doesn't matter. Just let me know. I know some people kind of get weird with like bullish and bearish. Clear with us. Okay. So we understand these rules, right? As long as the market is making higher highs and lower highs, we are in a bullish trend, right? Does anyone not get that concept before we move on? So, higher lows. Sorry, higher lows. Sorry, that was did it on purpose. See if you guys are paying attention. Yeah, that's what I did. As long as the market is creating higher highs and higher lows, we are in a bullish trend, right? Initial structure high, outside return. New structure high, right? Violating our previous initial structure high, outside return. New structure high, violating our previous new structure high. Then after this would be an outside return, and this keeps happening until the trend is over. So there are two important parts. There are two important parts that you need to pay attention to, right, in this type of concept. Tier 1 members, tell me, what are the two most important parts? What are our decision points going to be? Doesn't matter what time frame is most accurate. Whatever time frame you're consistently trading. Those questions aren't relevant right now. Trust me. This is price. Price moves exactly the same on any time frame, any market. You can go to cryptos, you can go to commodities, you can go to stock market. Price moves the same. It goes up, down, it goes sideways. These concepts apply to every market. So, pork bellies. There are two places that are going to be important in reading a trend. This is very important, so make sure you write it down, right? The two places that are going to be important are this. Our new structure high. I'm going to make this rouge. Our new structure high and our outside return. Now, again, non-tier 1 members, who can tell me why these two levels are important? Outside returns, new structure highs. Support and resistance, current gain, support and resistance, because of previous structure, resistance for stop losses, shows conviction, price targets, entry points, trade maintenance, violence of I like that. Trend violence. I'm going to have to adapt that term. Guys, we're in a violent uptrend. Order flow changes. Confirmed if the trend is still valid. There we go, Nicolin. All right. Anyone else? Any ideas? This is for all members now. I don't mean to offend the tier 1 members, but I want our traders thinking. So if you're a tier 1 member already, you know this. I don't mean any offense. I want our new traders to think. I don't want them to get the answer right away. These are going to be what we call our decision points. And these are going to be the two areas which either confirm the trend or violate the trend, right? So if from this level, if price violates our new structure high, what does this do to our trend? Does this confirm our bullish trend or violate our bullish trend? It provides us with confirmation, right? Because we know that the series that we're looking for is what? Higher highs, right? Now, on the other hand, what if this outside return does this? Now what have we done? Are we staying with our pattern of higher lows? No. We violate. I'll do it one more time, right? So these are the two decision points. And again, this is probably the most, I think all these concepts are important, but this is the one that's going to make things less confusing when we get to the harsh reality, right? Well done, Steven. You got it. So the two levels we need to pay attention to. These are going to be our decision points, right? Our most recent structure high and our most recent outside return. Because these two levels are going to tell us what we should expect, right? We teach something called the if-then syntaxes, right? Thinking like a computer. So you guys that are programmers, you know that, right? If this, then that. If this, then that, right? If price action comes off of this outside return and we push up, you guys all agreed that if price stops right here, this isn't confirmation of a trend. However, if we break and close above that level, what does this mean? Trend continuation, right? Confirmation that the trend is likely to continue, at least for the short term, right? If we did the opposite and we travel down here and we violate our previous outside return, what does this tell us about the trend? Is it confirmation that the trend will continue? Is it violation of the trend? violation, right? Confirmation, violation. Confirmation, violation. Very important concepts. Make sense, everyone? Don't worry about targets right now. You're worrying about the wrong things. We're learning to drive here, right? We're in the parking lot, 5 o'clock in the morning when no one's around. We're not on the highway yet. All right, perfect. So let's look at the reality of what a trend looks like, or the harsh reality. That's the reality. It happens sometimes when the markets are nice and smooth. Unfortunately, the markets aren't always nice and smooth. And this was a problem that or issue, I should say, not a problem, an issue that many of our members had recently, is looking at the trend inside the trend. So the reality of trading is it looks like this. We'll start nice and simple, right? Ease you guys into it. And then, right, it looks like this, and then, right, this, right? Does this look familiar to anybody? You're like, what the hell is this? Sean says, that's amazingly accurate. It's not my first rodeo. Yep. I've been doing this for 13 years, man. Look at charts every day. So it's like, yeah. Now, this is confusing to the naked eye, right? This, if you were to just look at this and you wouldn't have had this last hour of awesome trading or training, you would have no idea what to look at this. But we can apply rules to this, guys. And when we can apply rules, it makes it so much easier. So let's start over. Do you guys mind if you join me in walking me through the process? Is that okay? Again, I like the engagement. You retain 50% of what you learn when you engage, 75% of when you practice it, 90% when you teach it to someone else. So this is just a cheap trick for me to retain more information as I teach it to you guys. All right. So let's start off here with our starting point, SP, because I'm bound to make a spelling mistake at some point. This move is what? Our first move. Initial structure high. We're not bullish yet, because bullish, we need what type of move? We need the 3-point move, right? So starting point, initial structure high. We come back down. We do a little bit of this. Now, what is this called? This is going to be our retracement, our pullback, or our outside return. See what I did there? Or outside return? No, you don't get it. Now, we have this. And this becomes what? This is called what? What do we label this? Our new structure high. Right? New structure high. Now, we now have a confirmed trend, correct? Would you guys agree? 100 out of 100 traders would agree based on the rules we set forward? Okay. Good. Now let's get dirty. Yeah, let's get dirty now, right? So now the market, now the market does this. And the question is, what the heck is going on? Well, dang. What the heck is going on? Daniel says we have broken the cycle. Consolidation. What do you guys think? Type it in. Ranging. Bullish, bearish, or question mark? Right? Call it the Scooby-Doo. That's the extent of my dog impression. Right? Now here's the thing, right? We're still in a bullish trend. Who would believe that? Remember the last thing I told you, right? If we go back and we measure out our two important levels, right? Our new structure high up here and our outside return. In order to violate a trend, What needs to happen? It needs to violate our previous outside return, right? Well, this is a simple black and white answer, right? Have we violated it? No. So has the integrity of our trend been broken? So are we still bullish? Ah. So now I'm going to delete this one more time. With that in mind, right, when we draw out something funky, right, when I give you something like this, it becomes very simple what to look for if you work through the process one step at a time, right? Initial structure high, outside return, right? I'll draw the yellow line. This is the level that needs to be violated, right? In order for us to be out of this bullish trend. We retrace right here. Do we violate that level? No. We push up. We come lower. But do we ever violate this level? Nope. And then eventually, what do we end up doing? We end up violating our previous structure high, giving us confirmation of the continuation of the trend. And then the process continues from there, right? Pay attention to the outside returns. Was this outside return ever violated? Trend never disrupted. Right? Very important that we learn these decision points. Very important that we have rules for what confirms a trend and what violates a trend. Because the harsh reality of trading is that the majority of the time you look at the markets, it's going to look like this. It's going to look like a piece of junk. And where before, many of you guys are getting confused and you're seeing things and you're this, you're that. Now you have structure on how to identify it. Now you have rules that can give you a confident answer of whether we are bullish or whether we are bearish. Now, just to touch on this real quick, because I saw a few questions, right, about time frame. Understand that the market moves in fractals. Does anyone not know what the word fractals means? Fractals are like, picture like a snowflake. You know how a snowflake has a very distinct pattern? But then if you zoom in on it, there's a smaller pattern within the very distinct pattern. But then if you zoom in, there's a smaller pattern within the smaller pattern within the smaller pattern. And if you keep zooming in, it's patterns and patterns and patterns and patterns. The market is the same way. So we may have an uptrend like this, right? Bullish trend, would you guys agree? Yep. This is our outside return, right? This is our downward move, or I'll make a new one. This is our downward move, our retracement inside an uptrend, correct? Now, if we were to zoom in on this area, let's say in a lower time frame, this leg right here could be its own downtrend. You guys follow me? Right? Price is moving from a high to a low. Price is moving from a high to a low. This could be its own defined bearish trend on a lower time frame. Does that make sense, everyone? And this is where a lot of traders get stuck because, well, Akil, I have a bullish trend, but then I went down to my 15-minute chart and I saw a bearish trend within my bullish trend. But then I went down to my 5-minute chart and then I saw a bullish trend within my bearish trend, which is within the bullish trend on the higher time frame. And then I went to the 1-minute chart It's always going to be like that, guys. There is always a higher time frame. I hope you guys understand. There's always a higher time frame. So you are always looking at something within something that is bigger. You're always looking at a small snowflake pattern inside a bigger snowflake pattern. You can take the whole thing, I don't want to get too weird with space, but like universes and galaxies and all that stuff, right? We're on Earth, which is in its very specific solar system, which is within something much bigger, which is within something much bigger. So just to end things, the natural question is, okay, well, Keel, what's the best time frame? That may be one that's going in my book. I'm writing a book that will probably never get released, called The 50 Dumbest Trading Questions I've Heard. That's not a dumb one. But when people phrase it in a certain way, it is. What's the best time frame? Only 50? I got to save the other 50 for round 2. I'm probably never going to release it because I don't want to be harsh. But I'm only taking the most, like the really bad ones. Like, Akil, I'm in a trade with no stop loss and it's going against me. What should I do? I don't know which direction or when's the market going to go up? Stuff like that. I got some really bad ones. Really bad ones. But there is no best time frame. What's important is what? Rather than looking for the best time frame, what do you think is more important? I gave you guys a very simple formula earlier. Well, who remembers that formula? If you don't, I swear to God. Oh, nope. The formula to success. Consistent analysis plus consistent execution equals consistent results. Consistent analysis means that you're consistent in which time frames you're looking for what. So it doesn't matter if Greg uses the daily as his higher time frame and drops down to the 60 as his lower time frame. Doesn't matter if Nancy uses the hourly as her higher time frame and goes down to the range bars or lower time frame. One trader isn't wrong, one trader isn't right. They're both right because that's what they're consistently using. And because Sean is consistently using the daily as his higher time frame and the 60 as his lower time frame, he's consistently seeing the markets the same way each and every time. Does that make sense? Doesn't matter what any other trader is doing. Remember, don't compare. What matters is that you're consistently doing things the same way. Your eyes are consistently seeing things the right way. So there is no wrong time frame if you're following the time frames that you and your trading plan are supposed to follow. Give me a yes if that makes sense. Amen. So we're going to do this. We're going to take about a 15-minute break. I hope these concepts made sense. I want you to review them later on today, either by watching the video or just taking a look at your notes. But understand that throughout the week, we're going to show you how to practically apply them. So we're not just teaching you this stuff and we're going to never see them again. Later on this week, we're going to do some live trading. I told you later on this week, Jason Grayson is going to come in and teach you the rules of one of his swing trading strategies, right? So it's important that you study this. It's important that you go over this because if you don't, you're going to make it more difficult to understand what we're going to teach you next, okay? I don't mean to talk to you like children, but if you want to be successful, you need to do every single thing possible. And we're going to give you something very powerful, something that you can go out and start testing and start trading. But you got to do it the right way. Yeah, man, I forgot. I'm a father of 2 now. That's my